is if you have any specific questions on anything. We're going to go through some stuff, but we have time. So be thinking about specific questions that you have.
Are you going to do that at the end, or do you want to do questions now?
We could do it now, I guess. We could do that. Yeah.
So I do have a question, which is, I talked to somebody about the S Corp thing, and they were saying, and I didn't talk extensively about it, but that it might not necessarily be better than being a sole proprietor in terms of you've got to pay extra fees for something, and you've got, you're still paying your self-employment and Social Security taxes. So I'm not clear on where that, because I was like, oh, I should have been being an S corp because I would have saved like 10,000 a year that I would have invested. And they're like, nah, not really. So I kind of wanted to just get clarification on that.
That's a great question. Usually we don't recommend that anyone's form an S corp until their net income. So your gross, less all your business expenses, is at least $100,000.
Yeah, but here all of us would be at least $100,000.
Yeah.
So
Okay,
that's not an
good.
issue for us. So that's where,
Okay.
I mean,
So the issue, you have another issue of potentially liability protection.
Right.
Okay, so if you're a sole proprietor, everything you have is subject to access by if someone's going to sue you, unless the brokerage indemnifies you. But the brokerage may not indemnify you for everything you need to be indemnified for. So that's the big deal. If you're making over 100K, you have more exposure if you get sued. Okay, so a limited liability company or an S corp would help you. Now, the reason why people will say go S corp over limited liability.
Wait, can you go back? Can you explain why it helps with the exposure of a lawsuit? I know that it does, I just don't know why.
Okay, so I'm practicing law without a license here. So
I get it. It's okay. I won't.
okay, I
keep
just
you
want to
up.
make that caveat.
Yeah.
A limited liability corporation and an S corp are separate entities from you. So it's like that. I'm sure you've heard it, if you followed anything with the Supreme Court and that big decision where they could, make contributions. A corporation is considered a separate entity. So if you enter into business with your LLC and me, and something happens and there's no non-disclosure and no one's taking care of me, and I get pissed and I want to sue,
Yep.
I would have to sue your LLC or your S corp. Okay.
Well, so I guess what I'm curious about is
So your assets, your
if
house.
you've already been sued and you have your E&O insurance for the
Okay.
lawsuit, wouldn't the settlement require that we're indemnified? Or in some way protected from being sued afterwards?
Well, that might be for one particular lawsuit. But
Okay.
this is, so let me take it out of your realm and put it in my realm. Okay. As a CPA, if I practice as a sole proprietor, everything I own is, and someone wants to sue me, everything I own is up for grabs.
Yeah.
Everything, except my 401k.
So you don't have E&O?
Well, no, I do. If I did,
Okay.
okay. As a sole proprietor, if I had E&O, that would give me blanket coverage against any future lawsuits. But because I don't have it in an LLC or an S corp, hypothetically, then they would sue me, and then my E&O insurance would come in and cover me. Okay, but because they're suing me directly, there may be some more options to get access to my assets, depending on, again, I'm not a lawyer, so that depending on that's.
So let me just share too. I've been an LLC forever for that practice because I own real estate. I own quite a bit of investment properties. There's a lot on the line. The only reason I went to an S corp is because I was making way too much money over the last 5 years, and I wanted to take advantage of the tax advantages. But an LLC is actually, maybe I'll let you finish, but I just wanted to share that.
No, that's good. So you can, the thing is about.
But if you have an umbrella policy, doesn't that help you too?
That's your personal assets, but that's not against, that may
But
not
it
be.
would help you with your investment property, right? Like if someone slips and falls or whatever, I guess.
Yeah. Yeah, there's different kind of lawsuits that you could be subject to. If
Okay,
someone slips and falls, you would have an umbrella policy to protect you against that. But
right,
E&O is protecting you against errors and omissions in your business, not if someone
right.
slips and falls. So
Well,
we're going to actually follow up with insurance people coming and talking about the different kinds of insurance. Okay. But
So,
right now we're talking about legal liability for an entity, you practicing as a realtor. Yes.
so I understand the liability issues with the LLC or the S corp in terms of not having personal liability that maybe our E&O would cover, and depending on what that is, if it was something egregious, E&O wouldn't cover. But my question goes back to the tax saving, because I feel like I've screwed up by not being an S corp. After that last class we did, I felt really like I just real. So I want to know if like, is it? I mean, and like I said, we're all making over 100. I mean, some you can make 250 to 5. You know, like
Right.
You're making that kind of money because I never know, so I don't want to presume. Okay. I should have known you guys are from the California
we're in the
Pacific.
Bay Area.
Yeah,
I know.
my average price is 400,000. It takes me a lot more energy to get
Mhm.
to
Yes,
there.
yes, yes.
But here's the deal. It costs you money. It's going to cost you a few $1,000s to have an attorney set up an LLC for you, which I would do. I wouldn't ever set it up on LegalZoom. Have an attorney do it for you. Okay.
Mhm.
And then it might cost you a little bit more, maybe, I don't know what the prices are in the Bay Area, but let's say it costs you 5 to set up an S corp. Okay. You could set up an LLC. There's ways around that, but let's say you go right to it, you go to an LLC like Amy was. Okay. And then she had a huge tax year. So we wanted to save her taxes. So in the LLC, you could click a box and your CPA can elect for you to become an S corp. They can even do that retroactively. So if you're an LLC and you're towards the end of the year and you go, oh my God, this year was so much bigger than I thought it was going to be. I thought it was going to be a horrible year. It's turned out to be really good. I want to do the tax advantages of the S corp. Then you could do a retroactive S election to the beginning of the year, as long as it's filed before the end of with the tax return. So you could, on April 5th, March 15th, your CPA could file a retroactive election for January 1st of the prior year and give you the S corp protection. The
Wow.
difference between the S corp and the LLC is that you can limit the amount of your income that's subject to Social Security tax. That's where the tax saving comes in. So if you have $500,000 of net income, you can say, okay, my salary is 100,000. Everything else, and that's going to be subject to Social Security tax versus 500,000 being subject to Social Security and Medicare tax. Okay. And everything else, 400,000 is going to be 500,000 be subject to income tax, but only 100,000 is going to be subject to Social Security and Medicare tax.
Whereas,
That's where
whereas
the tax
it would be 160,000 because you max out at a certain point, right?
Well, there's a discussion about what's considered reason. We're getting kind of detailed, but if you guys are okay with this, there's a discussion about what's considered reasonable compensation. Okay. Some CPAs would say, oh, if you're at 500,000, you should go to the max Social Security, which is 160. But remember, Medicare tax, 3% is charged. If you make 10 million, you're charged 3% on that.
Oh,
So the savings is, so if you have 500,000, either way, you're only going to pay Social Security tax on the 160, whether you're an LLC or an S corp. Okay. But you save on the Medicare tax. So, if 3% times what, 400,000 is 12,000. So that's an extra savings for you if your net income is 500,000.
but doesn't your corporation then have to make up for some of that? Doesn't the corporation pay Social Security tax for you? And so you're still paying it in essence.
Well, yeah, right. So you have to think of you, and technically your S corporation and you are two different individuals, but the money is all yours, right? So you or the S corp is going to have to pay the Social Security tax and the Medicare tax. It's coming out of your pocket because less money you can take home.
Right, so that's what I'm asking then. How is it really ultimately a tax savings? How do we end up with more money in our pockets?
Um, sole proprietor versus S corp, right? That's
Huh?
the question.
Yeah,
Okay.
yeah.
In your sole proprietor, you're going to pay you're going to pay the Medicare tax on up to 160, but everything above 160, you're going to pay 3%. Same thing for the LLC. Okay. But the S corp, you won't pay the 3% on anything above your 160 because you're in salary. The S corp is a little bit more expensive to have processed by your CPA, and you do have to do a paycheck. But you can do an annual paycheck. So if your bookkeeper uses QuickBooks or you go to a payroll service, you can do an annual paycheck once a year. And what I used to recommend, so now I'm giving you tax advice, but what some CPAs might recommend, if it's just you, basically a sole person in the corporation, is when you're taking your draws out during the year, and like around October, you figure out what your tax is going to be for the whole year. And then you come up with one paycheck and you withhold all your tax that you're going to owe, or most of it. So you might do a balance of estimates and a payroll. It's just, I'm getting kind of detailed here, but there's a lot of strategy that if you have someone who thinks strategically on your behalf, that you could do. But if you're making $500,000, I don't know, the E&O, if your E&O is going to protect you against everything, and your insurance person and attorney have to give you that answer, then you could be a sole proprietor. It's cheaper because you don't have to pay for a separate return. But if that E&O is not going to protect you from everything, then you should be an LLC or an S corp.
That's a good question to ask, Julie. I'm actually going to ask my broker because I think I pay about $450 for E&O every year.
We pay E&O, I think, we
We
pay
pay
E&O for
$450 and then
each
each
transaction.
transaction we pay $100
Yeah,
or something like that.
a little more maybe.
So let's
Yeah.
So it's
talk-
$450 plus $100 each
There's a limit
transaction.
on so there's a limit on how many, what you could be sued, what the E&O insurance will cover you for.
That's what we got to find out. I'm going to actually ask my guy. We did just talk to a tax attorney last week that we're going to bring in for one of the deep dives. So we're going to keep you guys on that list and we're going to talk about the deep dives. You should definitely come to that one and we'll actually give you his name. He's out in California. That's the guy we just met with, right, Maida? Those guys?
Yeah.
This past week. We'll
Yeah.
we'll send you in the follow-up email with the recording today. We'll send you his name.
Oh, they're not tax attorneys.
No, they're not tax. Okay.
The Legato company is the
Yeah,
one.
that's the one we got to get. Okay, we'll get you that name. So,
But you really need to talk to your real estate, the people who insure you, to say, what am my coverage? Because like when I was in practice, I was covered for like $10 million. Now, just because it was $10 million didn't mean that someone could sue me for 10 and I would be covered for 10. They could maybe sue me. Let's say someone sued me for 250. My insurance company said, we're only going to cover you for 100. So then the attorneys had to work that out because if the settlement was more than 100, I might have to come out of pocket. Still,
Well, the way we
I
work
was an
is
corporate, I
that,
had no insurance. So
yeah,
personal services in California can be
the way we work is that we have to pay upfront. So depending on what our split is and what our deductible is, so it's usually around 20 to 25,000 that right up front comes out, it's gone, and then I don't know what happens after that.
But Judy,
20,000, that's a fairly low.
that's
from
our
an E&O.
deductible, I think they call that.
That's our deductible
Yeah.
before insurance kicks in.
Then you'd have to pay
Yes.
25,000 up to 25,000.
Yes.
Yes,
let's
Okay.
get some more
that's
details
the
on
way it
this
is.
and let's do.
I know
an
because I
email.
just did it, so that's why.
No, it's
Oh,
really
I'm
good to know.
sorry.
It's important
Yeah.
discussion.
Jennifer has a question too, Maida, before we move on, but let's
Okay,
follow
Jen.
up with an email thread on this so we're all comfortable. We'll put it in the community. We'll do
Okay.
a deep we'll do information on this in writing in the community. We'll send you all the links so you all can read it. And then of course you always have access to us via email and of course the monthly sessions. We're going to be continuing these because we have a new client starting in October. So we'll invite you to the meetings. Show up if you want. If you don't, but at least you know you can have access to us. But it's interesting that you have, and Jennifer, we're going to call on you right now because my E&O is nothing like that in Connecticut. So that's why we have to do it by a case by case basis. So,
State by state. Yeah.
state by state. Jennifer?
Yeah, I was just wondering how much a person should be making before they set up an LLC, because I'm kind of thinking like I'm a sole proprietor. Does it make sense for me to set up an LLC? And I just listened to all the benefits that you laid out. So I think maybe you've already answered like the big benefit is more protection. But if I'm not making, 500,000 and like maybe it's negligible, the tax savings, I don't know. Like what?
Jennifer, unless you're making 100,000 plus a year, they recommend not doing it. But all of us make 100 plus per year, so.
So at least the LLC to protect yourself, give yourself some liability protection.
But we need to find out that question from our
Yes.
insurance.
And I would
Yes.
say
I'll do a
that
little research on that.
if
Could you
could.
do
I'll
that?
come back to you, yeah.
Yeah. Yeah.
Is there a difference
Now
between
I'm
LLC?
worried.
And
Hey,
along
Adam?
with
Is
that
there-
research, hi, it's Gail. Along with that research, Judy, like I don't know what the number, what an appropriate number should be. And the people leading the call today can't say that either for us probably, but I don't know like what appropriate coverage is, at which point we should say, oh, that's not enough. So
Right.
That's
Right.
why you got to find out.
Okay.
Adam, what were you going to say? Thanks,
Is
Gail.
there a difference between LLC and S Corp as far as like when you would recommend doing one or the other?
Well, both give you liability protection.
Yes,
Mhm.
I was in LLC forever until I went over the 225 income a year threshold, Adam. And then I needed more tax savings. That's when I went to the S Corp personally. It was like 250, 2 around there I was making. And then I was paying an incredible amount of taxes. That's when my sister came in. So that's when I went to an S Corp. Hopefully
Yeah.
that helps.
We also put
Yeah,
a
and-
solo 401k in that. So, you can do that even in your sole proprietorship. But that's why we talked about those retirement plans the other day, because if you have a solo 401k, it's easier to fund it if you have a salary than if you're just paying in every month. But from a bookkeeping standpoint, it's easier. But you could do it without a corporation. And then you can save a lot of money in taxes with the solo
Yeah.
401k, because there's a solo 401k portion of it, which if you're over 50 could be like $30,000 a year. But on top of that, you could do a profit sharing portion. So if you guys are at 500,000, you could probably say, don't remember what the number is this year. I think it's like $65,000 you can defer into your 401k and profit sharing plan.
Yeah, so let me
That
explain.
saves you 30,000 in tax.
So basically,
California.
when I got the when I went to the S Corp and I had the personal 401k, I did a payroll. It was a yearly payroll. It was nominal fee. It was nothing. It was me and my husband. I put $2,500 away each month in the personal 401k. So by the end of the year, I had whatever that was times 12. That deferred my taxes. And then when I really had the money, I did the profit sharing up to 63,000 for a couple of years. So for a couple of years, 63,000 a year. I did it for 3 years. That added $180,000 to my portfolio, which is now generating 28% return, and it saves me on taxes. So that's what I got personal 401k is powerful. But you don't need to do all of that. Now I'm not doing that. We didn't even do it now I'm doing it for 2025. So it's a really good time to start looking at all your taxes, your spreadsheets, your QuickBooks. We're doing it now. We're getting everything organized now for 2025. Like this is the time we should be looking at it.
Yeah, I'm sorry, Amy.
Go ahead.
We're going to go into more detail on this when we have our tax planning webinar in November. And I really appreciate your questions because I'm gonna get some answers on the liability issue
Okay.
from my insurance guy, maybe even have him come in and talk for 5 minutes about it to give you guys all a little bit more, knowledge.
So-
That would be.
What you were doing with putting the 401k, you can't do that unless you have an S corp. If you're a
No.
sole proprietor, but if you're a sole proprietor, you have a SEP IRA and
No,
you,
Julie, you could do that with a sole proprietorship as
You
well.
can.
oh,
Mm.
because like right now I just have a SEP IRA.
Right.
Is that,
I'm not, yeah. So here's the thing about SEPs. You can put up to 25% of your gross income less your Social Security tax. So let's say you're paying 10,000 Social Security tax and your income is 210. So you could put 25% of that in, of 200,000, right? So what's that? 25% of 200,000 is
50,000.
going to be
50.
50, right? So you could do
of
that.
gross income?
Mhm.
So, so that profit sharing thing, you can put more.
But in the right. And so, but you might not be able to put, I have to look at the limits, but if you could put up to 63,000 in your SEP, you could do that. If you have anyone working for you,
Yeah, I don't.
okay. That's a real pitfall though. If you have anyone working for you, you have to
You have
put
to equal.
25% of what they make too in the
in
SEP,
the SEP.
Yeah.
right? So
Yeah.
you may have someone that you hate that you're going to fire, but you haven't fired them. You put 25% in, right?
Okay,
And they take that money and walk. That's their money.
yeah.
It's vested right away.
Julie, that's why I did the personal 401k over the SEP. That's when I made that decision. But you need to talk to your financial planner for your situation. And that's why we went through how to pick a financial planner. And that's why we had that one guy on.
That was probably the class I missed. So I'm gonna go back and review that because I don't have a financial planner, obviously.
You can
And
Okay.
actually, Chris is in California. That's why we chose him for this course. And he has an associate, Maria, who
He's great.
also does. Yeah. So if you called Chris, he would talk to you. And if it seemed like Maria was the better fit, then he would have you work with Maria or someone else.
And we
Okay,
don't make any money with these referrals, guys. This is all just, we never want to be tied to someone. We want to feel comfortable. But we have financial planners, other financial planners. But Maria, we've referred a couple people to her already through Chris, and they're like ecstatic.
I haven't referred anyone to Maria who hasn't absolutely loved her.
Right. So
She's
you might want to
really
think
good.
that out. And
She's in the course. There's interviews with Maria in the course.
yeah. Here's another thing that Maida told me years ago and why I picked my financial planner. Do you all use someone to do your taxes? Do you have like a accountant that does your taxes?
Mhm.
Email them and say, I want a financial planner. Tell me of all your clients, who's doing the best by your clients, because they see the numbers they do and they'll give you, that's what I did. My accountant gave me 2 names and I interviewed 2 of them with the questions that we gave you in the course. And that's why I chose the one I went with, because it was referred. Like these guys they do crazy returns every year. Like they're really good, but they also understand real estate. So real estate people.
so you say, I'm looking for a financial planner. Who of your clients is doing the best by their financial planner?
You know who the
Right.
financial planners doing the best by their clients.
Yeah.
They won't give you numbers, but they'll give you, but these 2 seem to do, because they're always, they're looking at people's information all the time.
Yeah.
For example, in Santa Barbara, there was one firm. It's like, oh my gosh, this is the best firm. I never saw them making any money for my clients ever. So if my client wanted to go to that firm, and then they'd give them this crazy tax advice that wasn't really accurate. So I said, they're well thought of. They have a great reputation, but I don't know why I would go to this guy over here instead. So, okay.
You know what we'll do? We'll send you in the follow-up email a little bit more this information in writing. We're going to do the tax thing, but we'll also put some links to some of the recordings in the class if you just want to go to those to learn about this, so you can see these guys talking. Okay.
Yeah, but I would listen to those webinars and the interviews and see what you think. But for sure, we'll do what Amy said. And try to come to the tax class too, because we'll go into more detail. And if you have any specific questions that you want me to answer in the tax class, submit, because then we can be responsive to what you need. Okay.
Um, I have one more unrelated question, if you don't mind me
No,
asking
go for
before
it.
you jump in. I know it's
Yeah,
already halfway over.
that's okay.
So in looking at the business plan, I did have a specific question. Underneath the plan with numbers tab, there's the working capital for business, and it says this is optional. And I wondered if you could expound upon that for a minute and tell me what what that is aside from, I mean, I know I've already put in expenses related to like farming and that kind of stuff. So what is the working capital for business system?
Where is that on the plan? I just put it up on the
It's
screen.
it's in the
Pla-
tax section, I
Plan
think.
with numbers. If you hit the plan with numbers tab, I think
Okay.
Yeah.
maybe go down.
Go over to the third column, Amy. Yeah, see right there. Working capital
Yeah.
line 71. So what that is, Jennifer, that is kind of like the equivalent of a rainy day fund for your business. So you don't want to have zero account money in your business account, right? So let's say you run like $5,000 and your $10,000 in your business account all the time. Working capital is kind of a cushion within your business account. So we're basically just saying you can plan for that by upping your total income required by adding that in. Okay?
And Jennifer, I do 10. For some reason, knowing when I open my bank account and I see 10, at least 10,000 in there makes me feel like I'm okay. I can't explain it, but you have to come up with that number. But 10 is my magic number. I'm like, oh, good, I have 10,000. I could live for another month and a half without another deal.
So what we
Okay.
say, what we say is what's your business nut? What's your overhead in your business every month? If your business overhead is 2,500, then 5,000 covers you for 2 months. So you don't
Okay.
need to dip into your personal to subsidize your business. You don't want to go reversed. Okay?
Got it. Thank you.
You're welcome.
You're welcome.
Okay.
Thank you for doing that.
Well, thank you so much for asking all of these questions. It helps us understand how to make it easier to understand without violating giving information without a license. So that's why we always have to be careful. But I think we started. Adam, I hope we answered your question. I do believe we got you on the right path. Julie will keep you going, and hopefully also Judy, that we helped you there as well. And Gail, I know you chimed in. So if you have any other questions, we'll make sure you have our email addresses so you can respond. So just a reminder, here's our emails. These are our personal emails. You can email us any other specific questions that you have, which we'd be glad to share. Oh, I didn't mean to do that. I'm a little crazy here. Let me see, where am I? All right, here we go. Did you all hear the news this morning about Compass?
Yes.
No, what happened?
Compass is buying stock options. They're buying Anywhere for 1.6 billion. The Compass people will have about 78% of the stocks. The Anywhere group will have their balance at 22%. And that's going to happen mid next year. So
What is
Compass
Anywhere?
it's Century 21, ERA, Sotheby's, Coldwell Banker, Corcoran.
You mean Anywhere is all of those stocks?
Yeah. Yeah.
Yeah, I
Compass
didn't know
bought-
what Anywhere was.
Yeah, that's the consortium who owns all of those brands. Century 21, ERA, Corcoran, Sotheby's, Better Homes and Gardens, Coldwell Banker.
So basically Compass is going to have the majority share in all of those companies?
They're owning them. So it's just watch the news. It just
Is there
came
going to be
out.
some sort of
Emails are-
antitrust issue that's
We'll
hopefully?
see. I thought the same thing, but it's
Yeah, I mean-
340,000 agents. So yeah.
I don't
Yeah,
know.
I mean, that's.
They were sitting at the king's dinner, maybe not.
Okay, we're moving on. Okay.
I can say that
so-
in California, Amy. Okay, go on. So we want you to create a business life plan with you running your business rather than your business running you. And all these things that we're talking about are tools that are in your toolkit to help that happen. You want to go over the formula, Amy?
So we started the class, and these are all the sections in the class. If you put it on your calendar, spend 15 minutes twice a week in there. You will get through the course. You need that foundation to understand where we're coming from. We don't want you going and doing something with all the information. So we talked about being an entrepreneur in the beginning. We showed you the financial roadmap with what the business roadmap was. We show you how to pick the right financial planner. So if you didn't take that part of the class, it's right there in the manual. It gives you the questions to ask a financial planner and all the other people you need on the team, which is in that class. That's your posse. We talk about the business plan, and we showed you how to use it. That business plan can be brought to a financial planner to create your whole plan for your financial success. And then Maida went over some of the traditional investments last week, like the SEP, personal 401k, all the IRAs. And today I'm going to talk a little bit about the non-traditional investments to see where you are.
This is the overall roadmap of financial planning, and we don't have all the arrows in it, but just for a refresh, you start with your earnings in the upper left-hand corner. You need to save money, put it into cash. As you save money, and many of you are past the beginning stages, then you're going to start investing in real estate because you love real estate. And then as you're making more money, you're going to start putting money in a retirement plan. So you're sheltering your income with your real estate because you can be materially participating in your own personal real estate and get access to the tax advantages there. And then the retirement plan, again, depending on the amount of money you're making and how much you want to save, there's the profit sharing 401k or the heavier duty ones. And then there's a heavier duty plan called a defined cash balance plan. So if someone was making, 800,000 a year every year, you can put money away in cash balance plan. It's expensive to maintain, but when I was in practice, I had some clients who would put 250, 300,000 a year into their cash balance plan. That saves a lot of tax, right? So, and
We're
it
going to
grows
have a
tax
deep
free.
dive on that. We're going to have a deep dive on that. That's who we were talking
And
about.
then when you want to retire, you flip the switch.
Yeah.
You have your real estate generating income, you have your retirement plan generating distributions, and you have your cash account. Hopefully it's been invested well, generating interest and dividends. So those three sources of income which should tide you through your retirement. Okay.
And the nice thing about financial planners, as we mentioned before, they use software so they can troubleshoot anything you're planning on doing. So I mentioned this before, but I sold an investment property and I was going to pay off the mortgage. I emailed him. He ran a couple of scenarios in my plan, and he showed me it was better if I kept the mortgage for tax benefits, and we invested the profit from the sale of the home, and it's doing really great. So it really depends on what you need to have someone who can advise you like that on these.
And if you go back to the course and you look for the first interview with Maria that Amy did, Maria walks through what a personal wealth plan looks like that a financial planner would prepare for you. Okay. And this is a plan where the one person is a realtor and the other partner is a teacher, and how they grew their assets with the help of a financial planner to be able to retire. So any questions on the business plan and budget besides the good one that Gail asked? No? And we know what follow-up information we can provide, but if there's anything else, we really are looking forward to hearing any of your input. Okay.
Really, I encourage you to use the business plan. I'm actually almost done with my QuickBooks stuff through September, which is going to my financial planner, but I'm also sending him my budget for my business plan. And then he really does use that to figure out what needs to be done. So we encourage you to use it if you can. Okay, so we're going to talk about the other types of investments that are out there, and you might know some that we don't know. So I'm going to share some that have come up in some of the classes, which I think are important. So let's just talk this is all in the class, but these are some of the ones that many of our students that we've had in our trial programs and also that we've interviewed, this is where people are getting passive income. So of course, first is rental properties. And I'm not going to get, so we're talking anywhere, I would say from 1 to 3 units. At 4 units, of course, it becomes a commercial piece. So single family homes, duplexes, triplexes, great rental properties. Maida always rolls her eyes. Like we own a triplex here in Connecticut. You're gonna laugh. It's worth only about 400,000, but it generates $5,800 a month for me.
Wow.
It's 1,600 a rent, so 16 times 3, right? So if anyone wants to invest back here east, let me know. Although everyone wants to buy these properties because they're such good investments. So rental property, does anyone here own rental properties that they manage themselves now? Does anyone? Okay, great. What is it? Single, multi? What is it?
I own a Airbnb. It's a single family in Tahoe.
Got it. Okay,
So
great.
I have a question. What is the advantage? I know as a real estate agent, I get special tax benefits
Yes.
for having rental property. And can you explain what that is? Because I know we get it, I just don't know what it is.
So
Yeah.
I don't know if I have it off the top of my head, but you have to work a certain amount of hours per month in real estate and be able to prove it.
Right,
get-
I remember that.
Yeah.
Yes.
Maida, do
yes.
you remember what it is off the top of your head?
Yeah, there's 2 standards. There's being active in real estate. You have to have that. So that's 750 hours out of 1,500.
Okay, what's number 2?
Number 2, material participation. That's the harder thing. So material participation is you work personally 250 hours managing your real estate, each piece of real estate. Now, I took a class in that and I was kind of surprised, but this guy was saying, well, if you hire people to, repairmen and stuff like that to handle your real estate, then that kind of can count towards your 250 hours. I'm not quite sure, but maybe. Where you kind of get could get into trouble is if your property, let's say you buy a condo in a condo association and there's an HOA and they manage everything. And let's say they manage even who, like when people go on to come and rent, they go through your HOA, the management company to rent. Then the IRS will come in and say, no, 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 you don't get material participation. But there's a way around it. However, if you qualify for material participation, and likely you do in your Airbnb, Judy, right? Because no one else handles it, you.
Right.
Then you can do all those really cool things. Like if you can create a loss through depreciation in your
Right.
Airbnb, you get to deduct it because you're active in real
Right.
estate. That's the
Right.
benefit of that.
That's it. Okay, that's what I was wondering. The deductions. Okay, the losses on it. Okay.
Yeah, and you
Exactly.
know about, and there's a lot of fancy, we won't go into today, but there's a lot of fancy depreciation things you can do where you can write off a lot. So
Yeah.
that's the benefit to you. Okay.
You know what? Let me
Okay,
ask
great.
Dan. Maybe if I don't know if Dan will do it, but maybe Mike will. Let's get a list of all the things you can write off. You should probably get that. I can get that. Okay. Does
Great.
anyone here participate in REITs? Is anyone here in a REIT?
I think I am.
It's
Oh,
actually,
no, maybe hold on. I'm involved in a commercial property, but my father invested in it, and then when he passed away, it passed to me. So I just get a check
Dividend.
every quarter.
quarter. Yeah. Okay.
Is
I was
that a
gonna-
REIT?
If I
It's not-
smiled, it was because I'm going, you're kind of young to invest in a REIT, but that makes sense. Dad did. So the play there is that if you wanted to, I don't know how it's invested, but the beneficiaries if you decided to sell your interest in the REIT, your basis in it becomes the fair market value at your father's date of death.
Oh, great. Okay.
So you
So
might
the
want
oth-
to talk to a tax person about that.
Fair market.
Some of the reasons people are investing in REITs is if they're selling and they don't want to buy another property, instead of 1031ing into another property. I don't know if you've all
Yeah,
ever done a
definitely,
1031
definitely.
like mine, like kind properties. When you sold one, so you can push the tax liability down the road. I've done that 3 times in my life. But the REITs is another way you can actually invest and not have to go get the headache of another rental property. So Anatole had to go out at 11 o'clock last night because the sewer was backing up on a property that's 45 minutes from us. He was not a happy camper last night.
That's a reason to invest in a REIT when you sell a property.
He was swearing.
Yeah.
And you know my husband, he don't swear. He was swearing.
You could do a tax-free exchange, 1031 exchange into a REIT.
Yeah, you can 1030. So that's kind of a cool thing. So when we talk about them in the class, we talk about commercial properties in the program, which is there's 2. One is fractional ownership, where you can own a piece of a property and get the benefits and get the tax write-off. But there's something also I want to encourage you to look into, which I've started. I've sold some of my active rentals, the ones where you have to go and collect the rent, into passive multifamily investments. So I'll give you an example. We have one in Dallas that the building was a sea level rental units, and it was in a really good area of Dallas that's really growing. The guy bought it for 21 million, and he needed 2.1 million down. So all of the investors, which I was one of, he came with 2.1 million. So you had to invest either 100,000 up to 250. So every quarter, I get a check from them. It's 8% return. And then what they do is after about 4 years, they either refi or sell, and you get your money back. So whatever you're going to get as the profit on that money, and they all do these in things called pro formas. There are some scams out there, so you have to be very careful. We do interview someone who does a really good job, and I'm just invested in another one in Ohio. Columbus is going insane, Columbus, Ohio. And we interviewed a gentleman in the class called Josh Cantwell, brilliant guy. So definitely listen to that. He'll tell you about it. What I love about this guy in Ohio, he owns the property management companies for all his buildings, and he owns the construction company. So I think that's pretty smart. Also in our course, we have an interview with an amazing guy who went from 5 single families to 100 doors. And he talks about how he did it. Now, some, people can buy that in their backyard. Others have to buy in other parts of the country because your prices are so much higher than many other places in the country, as you guys know. So these are some of the ways that people are investing and getting passive income. And it's all built out in the class. But I just wanted to show this up before we get into the end, because I know I want to try to stay on track with the time. Remember, these were really great
Amy?
data. Yeah.
Would you mind sharing again? I've heard of that before with the 8% return and then selling off after a few years. Can you remind me what that model is called? If there's any.
Well, it's passive commercial investments. So
Okay.
yeah, there's a lot
Okay.
of companies that do it out there. Just be
Yeah.
careful, there's some scams.
Yeah.
You need to be able to read their pro forma. So I
Yeah.
belong to a group, and we have 4 families around the country. Every month, if a new property comes up, we go over the pro forma. So now we understand where things could be off. So I would say it takes a lot of education to do this, but I'll tell you, it's nice getting an 8% check every quarter and not having to worry about the toilet overflowing like we did last night. So there you go. Hopefully that helps.
Yeah, thanks.
And really 100,000 is fine. Some people even let you come in at 50, but think about it, at 100,000, it's not bad.
Yeah,
And
I
then
think discerning which whether the developer is good or the building's gonna, fall into disarray or the whole thing's gonna be a bad investment would be a tough bridge for me to cross to figure that out.
Just like if any of you ever bought a rental property in the beginning, I think we looked at 30 before we actually bought our first one. Thank God I was the agent showing the properties, or they probably would have hated us. But we were young, right? We were
Yeah.
in our 20s, and we were so nervous. We had we had $50,000. We had eaten zucchini and peanut butter and jelly for like a year, right? We had 50,000. And so we didn't want that to go anywhere. So I think with this, you have to really read a lot. And if you go in the class, look up the Josh Cantwell, and he's got webinars all the time. You might want to just sit in and hear. I do belong to another group in Texas, but they're very Republican, and you would probably hate them. He is like, he gets up on stage and sings the song Proud to be an American. And if you can't even handle that, you're not going to want this group. But I
Thank you.
Yeah, but there's quite a few. If you find a group, if you want to email me, because we've kind of created a network around the country, I can tell you if I know if they're good or bad. So
Thanks. I appreciate that.
okay, but the whole beautiful thing is that they do use the same pro forma over and over for the property. So that's how you start being able to read it right to see where all the costs are. Okay. We did talk about Airbnb. We talked about the Airbnb. That's, of course, short-term rental versus long-term. And I will say the Airbnbs too, there's a lot more like short-term, like 3-month type rentals too now, with like traveling nurses and different types of people. So it still could be a great one. So let me go back here to the ones we were on so we can finish up. I thought these were interesting. A broker, I forget what she was made of, but she opened a REIT for her agents, which I thought was good.
Yeah.
Gas and oil
All of her
options.
agents could invest in this REIT if they wanted to.
Right, which is really cool. Being a mortgage broker, we had a client who was down in Galveston, and because the houses are so inexpensive there, she could fund their mortgage. They were like $50,000 mortgages, and if these really small houses down there. She was doing.
She was on the border. She was in a border state too.
Yep.
There's someone, I think it was maybe Arizona. Oh, maybe it was Texas, but border
It was
states.
Texas.
And so, where everyone's crossing the border all the time. And so she understood the community on the US side, and she would help them buy houses by having a brokerage within a mortgage company within her brokerage. I think that's fairly common though, where
Yeah, it
different
is.
brokers are doing mortgage companies now.
Yeah, she was just on her own doing that special. This was kind of a funny one. Turo car rental. This woman's making $2,500. She had an extra car. She leaves it at the airport if you need some extra money. People starting to build Airbnbs at their house. I do not think I could handle having people in my room over my garage, but that was another one. Nonprofit divorced widows to help them find a house, which I thought was interesting. A cryptocurrency, of course, coins, collectibles, and being wealth builder for client. What this person did was a CFO at a major corporation. So what she does is she really helps the people. She puts a whole plan together to show them how to build wealth with real estate. These are just some of the little ones, but the traditional ones are the ones we saw on the other screen. Hopefully we all can own some real estate other than just our major properties. Okay. Please go through the course. We have a lot of great information in there. So next steps is remember the roadmap that Maida said. I've been mentoring some young people here in my state that are new in real estate. I said, I don't care if you're putting away $50 a month, start saving consistently, get into the habit. Maida, did you want to share on this before we get to our last slides?
Yeah. Even if you don't have a retirement plan set up, you can, as we said, you can set up a SEP. That's the easiest one to do. You can set up things that require a little bit more planning, but saving consistently that way is really good. Also, kind of sometimes people like to make an extra payment on their mortgage every year. and that saves quite a bit. Could pay off your mortgage 7 years early. That's really a form of savings because you have your mortgage free 7 years earlier. Staying out of high interest debt is really important. Investing early, which you're doing, and then planning for flip the switch retirement, what I kind of went over on the roadmap. Don't wait until you're older to say, oh, I'm going to retire next year. It's not, you need some time to plan for it, especially because you all own your own businesses. So 5 to 7 years before you're thinking that you want to retire is when you should start flipping the switch. And when you think about it, if you have a good, healthy real estate portfolio in that, you can analyze your portfolio, which properties maybe have a lot of equity and you want to get rid of them and invest that equity in something that's a little bit more consistent. Anything that is cash flowing negative, you need to get rid of because negative cash flow and debt in retirement is not good. So you need to really work with a financial advisor who understands real estate and can help you come up with a plan for that. And you all know you can't necessarily, real estate is not as liquid as a stock. So it takes a while to liquidate it, find the right thing, find the right option so you can, stay out of a tax trap.
Yep. Excellent.
That's that.
So we have a couple of things we want to share with you. And just a reminder, set up a simple business goal. If you get anything out of the class, these are the 4 things. Set up a business plan goal. Open a business bank account if you have not yet. Talk to a CPA or a financial advisor and start saving monthly. So what we have coming up is we'd love to stay in touch with you. Come when you want to ask questions. You have our emails. We're going to be doing what we call Coffee with Maida and Amy, monthly sip and chat. So you'll be seeing those dates and you can just, say yes. And if you don't show up, we're not going to feel bad at you, but at least you know that they're happening. We are doing deep dives starting in November. And in November, we're doing a tax planning deep dive. And we're inviting all of you to that at no cost. It's costing other people money, but you are more than welcome to come to that at no cost. And we also are doing a budget course. We're going to do the budget like we just did planning in December. If you want to bring someone, introduce someone to it, you can also come to that at no cost. We're hoping that you can choose a commitment buddy from somebody in the group or just reach out to us. We are so happy to help you. We really are. And I love that you've been asking people in your community like you all did today. So if you have any other questions like came up today, just email us. So 3 things, and we'll send these to you because sometimes it's hard to do on a screen right now. Register for our tax planning deep dive. It's in November. We'd love to see you there. And if you register for our business planning deep dive and you bring somebody, you can put the special code in and get in there for free, which is great. And we'll send you this all in an email. And that's going to be in December. And then stay connected with us through our Thinkific community. If you have not joined yet, that's where we're going to be posting updated information on everything. So today, some of the questions that you all asked us, Maida will put that together. She probably already has an article on it somewhere, and we'll put that in the community so you can read in depth on it. So we really hope that you stay connected with us in the community. So we'll make sure that the QR codes, the links are in the email that I send with the recording so that you'll have everything. So that is it, unless you had anything that you wanted to share, Maida.
Now I want to thank everyone for spending the time with us. We've really enjoyed meeting all of you, and we hope you're all successful in your businesses and keep in touch. We're here.
Thank you so much.
Yeah,
welcome,
thank
Jill.
you.
You're both
Thank you.
so sharp. This has been really great.
Oh, thank
you.
you so much. We really appreciate that. We'll hope to see you soon in
Thank you.
November.
Thank you.
Thanks,
Okay,
guys.
bye everybody. Thank
Bye.
you.
Bye.